Welcome, everyone. I'm Greg Schnell, the Canadian technician, here to host the Market Buzz. This show looks at weekly setups across the U.S. market. Using the tools available on StockCharts, we'll look for long time frame trades. Please subscribe to my articles, my Twitter feed, and gregschnell.com for more information. Lots going on out there. I'm a nervous Nelly at the juncture here. I keep waiting for things to start improving, and they're not really improving, and that's kind of the issue for me. So we're going to get into those charts, and I'll tell you why I'm a little bit more nervous. But what I want to, kind of the order I want to cover it off in is we've got, I think I've been talking about these prior highs for 2 or 3 weeks, and I think this line on here has been here for 2 weeks for sure. Why worry? What to worry about here? The 3,000 things, and it continues to be the S&P 500 3,000. And as we look just off the October lows, we're starting to break that uptrend line where we're just not getting performance across some of the industry groups I want to see. So I'll show you on some charts today what I mean, and then the S&P 500, the Nasdaq Composite, and the IWM are all sitting on their trend lines or breaking their trend lines. There's a cheat sheet that you can use called the TSX, and the TSX is a Canadian market. Well, what you see is the Canadian market will usually weaken before the US market, and it's now down below the 20-day moving average. And again, as we chop sideways, that doesn't sound like a very significant place on the charts, but what happens is we continue to be drawing out the far end of the trend, and as we have these little short-term moves up, they're losing momentum on each one, and so we continue to make lower highs. So yesterday we had an outside bar on the XLF, we had an outside bar on the S&P 500, and all of these things are adding up to being kind of odd. So I want to talk about gold, and the only reason I want to go there is because it's starting to set up a little bit, and I think I might have mentioned it on Friday last week or on the weekend review, was that the charts are trying to set up, but I haven't seen the breakout yet, so that's what I want to watch for. And again, the TSX has an early indicator at 2-week lows. What does that mean? And it's just that it seems to break down before the rest of the market. So it doesn't necessarily mean that the US market will break down, but when you have the TSX breaking down, it's at least cautionary. And the IWM is now starting to follow. The Nasdaq Composite is starting to follow. They have, the Nasdaq, I think I've got the moving average line I'm looking at 80.25, and it's a little bit above that, sitting up around 81, 80, call it. So we've got a little bit of room, but not a lot of room. And that's the issue, is these things are continuing to put pressure on us. And we see this over and over. This is a daily chart of Caterpillar. And just as we continue to test these prior highs, we get up here. And then what do? We get these big reversal bars where we just trade higher, trade lower. So it's an outside bar already, and we're an hour into the day. When we wind out that picture into a weekly chart, got this big downtrend, and I will be the first one to tell you I'm looking for commodities to start to move because of the weakening US dollar. The last few days, the dollar's trying to build a base here and work a little higher, so we're watching that closely. But all of these things are adding up to be more difficult. And so again, how do you make money buying this Caterpillar chart? You probably don't, because you're just getting caught in a sideways move. So here's the semiconductors today, and what you can see is really gapping down again after getting up to this triple top, briefly broke up, kept trying to test, and now breaking down again. And I've heard some famous TV people say you can't sell the semis here, but there's a lot. The other side of that argument is that a lot of people bought semi chips early to bypass the tariffs. And now the issue would be, so all of that demand that kind of made this chart run up might end up being that we've already delivered all the chips, and now it's the opposite, where things are going to pull back because we'll have a gap in demand. I don't know. I don't follow it that I don't follow it from that perspective. I just follow the price action on the charts. And as all I know is in around that 1550 level, we break the uptrend off the lows, and the breakout that we had so far has failed. Okay, let's go up here and just briefly look through. So everybody's been talking about the strength of the consumer. And the issue I have here is you can see we have a high, a slightly lower high, now a lower high. And if you use the price labels feature on stock charts, it would put a label up here and say, okay, this was a prior high. And then down here we've got these rising lows. So we're in this wedge pattern, and normally this is a pretty bullish pattern where you have tops and it keeps testing and it tries to break out to the upside. The problem with that is we're starting to see some of the other stuff break down, and I'm going to go through that in just a minute. The consumer staples here continues to stay solid. Nobody's selling that off. And I would have expected that to release if we were going to start to break out, and it hasn't. XLE had a nice day yesterday, and energy oil's trying to do better today, but they're still not getting a bid. That's a pretty ugly chart. Here's XLF, and again, we broke out, and yesterday was an outside day, and today we're just hovering in here, but it feels more like this is going to fail as well. XLV, the healthcare, we had a nice big shoot to get above prior high, and what do we do today? We retrace. Again, there's a lot of defensive areas within healthcare. There's also the offensive areas, which I would call the biotech and pharma. And it's a battle of, are we in the defensives? Are we in the offensives within the sector? And I think at this point, it's pretty undecided. We haven't gone anywhere for 5 months. XLI, I really liked the chart I saw on UTX yesterday. And if we just go look at that chart, again, Boeing being hit as a Dow performer, but this UTX, is trying to break out to prior highs. But we've been here before, right? Once up here at 140, 140 the week before, 142, 137, 139. Here we are at 140. And my point in the Don't Ignore This Chart article was, if this chart doesn't start to go now, you can probably expect that the index is going to follow it. And why do I say that? Well, because if you look at this S&P 500 relative strength chart, basically UTX follows the S&P 500. And what do I mean by that? Well, this is a 5-year chart, and this thing just oscillates between the low, like it starts to outperform and then it starts to underperform, and it's been doing it for 4 years. So this wiggle is so close, it would be very difficult to trade it. I mean, you get a 4-week downtrend or whatever, 6-week downtrend, all these little ones. So when the S&P is pulling back, this might pull back a little faster. But the bottom line is they track each other. And if we look up here at the scooter ranking, so this compares to the large caps, and of the large caps, there's roughly 1,000. Large caps might be 900, something like that. What we see here is that the scooter stays between, call it 30, 25 and 75, and it never really gets outside of that. So what we look for on the scooter ranking is you have the really negative stocks, right? If I put up XOP here, you're going to see that the scooter ranking on that ETF is terrible. It's like zero point 0.1 or something. It gets very oversold, and then it'll go all the way to very overbought, and then it'll go all the way to very oversold. This stock never does it. It just hangs in here and behaves like the S&P 500. It just hangs with the rest of its peers. So we don't really get the breakout that we're looking for. That we're looking for on this chart in terms of outperformance. But what we might get on this chart is a little more data about the overall market. Well, at this point, we're just testing prior highs, and we're not really breaking through. If we go look at, so here's my list of the Dow stocks. And if we go look at all of these stocks here, we've got, 2/3 down and 1/3 up today. And it's just getting a little more tentative. And we saw the travelers yesterday have a really bad day, a gap down, and now it's trying to hold. But, it seems like each week we get some of these bombs coming in. We had Boeing with really terrible numbers, and people are trying to buy it off the lows here because they're sticking to their dates for the plane coming back out. I'm going to flip over now. I was mentioning the consumer stocks, the XLY, and I'm going to go back here just a little bit. Actually, let's do it this way. Um, I just want to go back and oh, it was on a different tab. Sorry. There we are, market summary. And so when we were looking at this consumer, we just see this lower high, and I'm a little worried that this is going to start to let go. And I was just mentioning the XLI with UTX. The materials, again, if we're going to break out because of a low US dollar, this chart should start to move. XLK, this looks pretty much like a failed breakout to me. We're back below 20 period moving average, and we're about to test the 50. XLU continues to be holding up, an XLRE. So if we're going to get a breakout, these three charts, the utilities, the REITs, and the staples should start to break down, and they're not. And here's XLC. And again, there's some big outperformance, like Apple's still doing well out there. But the chart I want to show you is this chart, and not with these two variables, but we'll come back to that. But I want to show you MasterCard. And the reason I want to talk about MasterCard and Visa is if you think that they're in everybody's wallet and they are probably the best idea of what's going on with the consumer. And if we go look, that's just intraday, and we're going to go farther down on the page. But I also want to show you, if you want to talk about online transactions or small business transactions, we've also got the other side of it, which is the service level. And this is Square and PayPal. And these things are letting go. And, here's the 200-day moving average on Square. That doesn't look very square to me. And then if we look at PayPal, we're breaking to new lows here, and we're breaking hard. And when we take that same chart and go back to MasterCard and Visa, we're just barely holding on here. So it looks to me like the smaller players are already breaking down, and MasterCard and Visa are trying to hold. But this doesn't look like a chart I want to own. And the other reason I don't want to own it is in terms of relative outperformance, it's starting to break this uptrend. And that's a big clue to me that things are failing. When you start to when something that's been outperforming starts to underperform, that's a better clue that things are breaking than probably anything else. And the scooter ranking up here stayed above 75 for the most part. Well, now it's clearly breaking down, and we're only 30 days from the biggest shopping season in America. So why are these charts breaking down now? I don't have a good answer, but I can tell you that it's that data. That's what I'm getting more concerned about, is the data starting to show that weakness. Okay, so why I'm pessimistic? I'm a little pessimistic because these charts aren't moving as fast as I would like them to. I'm going to end with the TSX, then we're going to take a commercial break. And the point I want to make on this TSX chart here is that we're just, we had a breakout in September, we pulled back, we couldn't hold it, and now we're starting to break down again. And it's that breakdown by the TSX, we're breaking this uptrend as well. We're breaking through the 20 period moving average, we're breaking through the 100 period moving average. There's lots of things starting to fail on this chart, and I want to be more ready. And the main reason is because, again, on the weekly charts, all of the momentum indicators keep making lower highs and lower lows. So let's go to a commercial, and we'll be right back. And when we do, we'll cover off.
Today's market volatility provides savvy traders and active investors with an abundance of profitable opportunities. At the Traders Expo Las Vegas, November 7th through 9th, over 75 of the most respected traders in the world, including Dennis Gartman, Tom Sosnoff, Todd Gordon, and Tom DeMark, will explain how they're adapting their strategies and share the specific trading opportunities they've identified in equities, options, forex, futures, cryptocurrencies, and more. Claim your free pass to join them at tradersexpo.com.
Okay, let's get into the gold charts. And the reason I want to talk specifically about gold today is if we were going to have a falling dollar, that should help gold. If we're going to have a China trade deal, that won't help gold as much. I'm expecting more from the industrial metals. So I'm looking for breakouts in lithium, looking for breakouts in rare earth metals, coppers, all those kinds of charts. And so far they haven't, but they're worth watching. But the one chart that's pulled back for roughly 8 weeks and didn't really fail is gold. And so I'm more interested that it's held up so well than I am that it hasn't broken out yet. So let's just go grab a chart over here and put up the two variables. So we've got GLD and GDX. What you see here is gold has been gently winding down here for 2 or 3 weeks. Same thing on GDX. So this is the gold miners on the right, and this is the actual physical on the left. And you can see since the early part of September, we've just been a sideways down move. Same thing here. This is what we call a bullish wedge, where the tops are declining faster, but the lows are holding. And so what ends up happening here is it usually we get a vault out of the move. So even as we look at the big picture here, there's reasons for gold to have stalled up here. We got the gold miners right back to the level they were previously at, and now we get a brief pullback. We're still above the 40-week moving average. What we'd like to see, obviously, is this full stow start to turn at the bottom here. We have a rising set of lows here, and as long as we hold this zero level, we're still in a bullish chart formation where we've got a series of rising lows. The thing that surprises me is we just don't break down here. We continue to hold these levels. And even as the rally started last week or 2 weeks ago, roughly call it October 3rd, this is pulled back, I'll call it 5% in a few days, but it's held in here really solid even as the market continued to test the highs. So it looks to me like gold wants to hold. And so the way I would try to trade that is taking and ranking them based on scooter ranking or something like that. So let's just quickly do that. We need to go to the edit profile, and you can either do it this way or you could have done it on the edit button here, either way. But we want to go get rid of these numbers that are on the front of the charts. And the reason we want to do that is we want to find what's working now. So we're just going to go over and remove the numbers from the front of them. Now in edit mode, there's no way to sort here because there's no other variables. So we need to go to summary mode to get those variables to show up. And in this case, we could either use scooter ranking. So we'll just turn that on, and volume. And the reason is if they don't have a scooter ranking, because some of these gold miners are kind of small, what we'd like to do then is use volume. So we're going to click on volume, and it's got the highest volume first. That's fine. And then we want the scooter ranking. And then we want to go down to the very bottom of the page and just hit number in sorted order. And that's going to give us the strongest stocks first. And then it's going to show us anything that doesn't have a scooter ranking. It's going to be by volume. So we'll see where the interest lies. Okay, now we can flip over and just start to work through these charts as 10 per page. And again, look at this scooter ranking, still holding up very strong, even though it's pulling back here. Now, this doesn't look particularly weak. This is an ETF for global gold miners. It's similar to GDX. But you can see we're just holding here in a little flagging pattern. And if it was to start to break above the 10-week again, that would be pretty bullish. Here's GDX, same chart, different company. Here's North American Palladium. And this chart started to flatline, so maybe they got bought out. Sibanye Gold, this one continues to make higher lows and higher highs. What's not to like about that chart? Nicely above $6 here. So even while gold pulled back, this thing's been working higher for almost 6 weeks. Very bullish looking chart. Centerra Gold holding up near the highs, pulling back this week. It's actually making a bit of a lower high, so that one's interesting on momentum. Might need more time to breathe. Eldorado gently pulling back here, nothing major. Look at the decline in volume. So it's holding in, but the volume is collapsing. That surprises me. So at this point, I'd have a buy order above the moving average, call it $11, and I'd have a sell order below the lows here. I do not want to trade this one until I get a direction. I want to wait for it. Here we had low volume and it was falling. Here we had flat market and it was falling. The difference is with these two, was we've had a longer uptrend, a more pronounced uptrend. We're above zero on our momentum indicator and well above for the first time. And I will say this, that early in my technical days, I thought, let me find all of the big MACD waves that were really high and short them. And I probably wrote out, I remember John Deere had spiked to like 5% or something. Uh, it had spiked really high. And I thought, gee, this one looks like a perfect short. And the good news was I was just paper trading the strategy, the idea. Well, what I found was that initial surge above zero, especially when it was a very steep surge, like this is a relatively gradual one. This is a relatively steep one where you get lots of distance between the signal and the line. This is usually telling you this is a new bull market and you want to get on board, not off board, and you don't want to try and short it. So, um, so if I owned it, if it started to break below support here, I'd probably let it go. But one of the things I'd rather do is look for this to break out back to the upside. And if this was going to start to pop, I want to get on board. Here's Silvercrest Metals, and you can see it's grinding sideways here for 2 or 3 months. Hasn't broken down, hasn't broken out, just holding in there. Physical securities, so this is silver, and again an ETF, and you can see it was pretty volatile up here near the top. When you're starting to move 10% a week, that can be a good signal that you're either near the end of the run or the beginning of the run. And in this case, we've really gotten down to a dull roar here where it's just holding around the 50-day moving average. So the volatility is coming out of it, and a bounce around the 50 on the full stochastic is typically a bull market signal. And when it keeps failing at the 50, what does that tell you? It's exactly the opposite. It's kind of a bearish signal where we continue to decline. Anytime we get these bounces around the 50, that's a bullish place to get on board. So we want to watch these sort of simple signals to help us find better moves. And again, I'm looking at weekly charts, not trying to get down to the minute or the minutia on how to trade this. I'm just saying these charts in general are starting to look okay. The fact that they've held up, and even while gold has rattled around here, it hasn't given up much. It's holding around the $1,500 level, plus or minus a little bit. Okay, Anglo Gold Ashanti. This is a beautiful chart. Look at how much it's running up here. And we see this pull back to the zero line taken off again. Now it could do the same thing, and it can oscillate up here for years if it wants to. But this chart looks like it's trying to make a run through 22, and it wouldn't take much to get going. Bouncing off the 50, I mean, this is a nice signal where you can set your stop relatively close, probably just under this week's low. Silvercorp Metals, same idea. You're sitting here with a flag pattern, so you've had a big pull. And the reason you get this description that this is a pull, maybe I should just take this chart, svm.to, and what was the previous one? Anglo Gold Ashanti, right? Whatever, let's use these two. Let's use SVM and USA.to. And what I want to show you on this chart over here, and USA.to, is that on a point and figure chart, you'll get this pole and it'll go up, and then what you'd like to see it do is form a flag. So much like it was doing over in here, where it goes up and it makes this flag pattern, and then all of a sudden makes another pole, makes a flag pattern, and then shoots up and makes this flag pattern. And in this case, now it's starting to break down and continuing to make lower lows, lower lows, lower lows. We've recently broke above these two last X's, so now this is on a buy signal. What we want to watch for here is, can this kick up and really start to make another high pull and get back on this sort of a trend that it was on earlier. So these pull patterns, you see it, here's a pole and a flag, a pole and a flag, a pole and a flag. So as the market rolls out, and again, just to give you an idea, this is September in here, this is October 1st, so all of this is this flag, even if you want to call all of this a pole. We're getting this pronounced move from the gold miners. Okay, Let's go back and just keep reviewing through these charts. I did want to cover off one more thing around gold, and that is, again, if the overall market was going to start to drop, then gold should probably hold up okay. What we want to watch for on the index charts is, do they continue to hold this trend line, or do they start to let go? I'm continuing to think they get weaker. Okay, I finally got my newsletter out. Actually, I've been getting the newsletter out just fine. The problem was I was trying to get the payment system working on my website. So if you'd like to go over and look at that, I'd be happy to have you come over. I'm just going to show you what kind of a newsletter you would get from me. Each week, I'll send out one, and this one was called Stall Speed. And then I read a little bit of market commentary about it. And then, here's PayPal, and you can see it's falling down here. It's continuing to lose in relative strength. So this is covered off. The software business is channeling sideways. And so you'll have 10 charts that I think are influential in helping us guide through the markets. And again, I try to use weekly charts for most of these. On that US software chart, I used a daily just to show how, what was an outperforming sector is basically hovering sideways, not really able to catch a bid to break out. So you're going to get this. I usually try to review all of the markets and show what I think are the 10 most influential charts. At the end of that, I'll give you a market wrap, and let me just jump right up to the top here. I should have covered it off a little bit more. On the market summary here, I usually talk specifically about breadth, and it was improving at a glacial pace, but my Schnell Strength Index is literally a 50-50 flip. There's no real direction. I'll try to give you some themes that emerging market bonds roll over in price or up in yields, and commodities could break higher. And the reason for that was the US dollar going lower. But I try to go through probably 1,000 or a couple thousand charts a week. And out of that, I try to pull what I see as the most important directions in the market and some places where we could move to start to make some money. And again, charts are still positioned for a major breakdown once again, and options expiration was last Friday. So the fact that we haven't done much since Friday is concerning me and kind of tells me that we're weak. But I'm going to try and put that sort of commentary in my newsletter each week, and we'll be expanding out what other services I can offer in there. There will be a separate bundle for some institutional work. All of that is sitting there. If you're interested, and the only reason I'm trying to let everybody know is because I did decide to just put out a significant discount right at the very beginning. So you would go to the gregschnell.com page, go to private investors, and down here, the annual fee is $860. But for everybody who subscribes, while I'm getting this thing kicked off, it'll be $285, which is just a little more than $5 a week. And I'll lock in that price forever. So it'll have an ID code or a coupon code called Founder. So if you click on that subscribe and use the coupon code Founder, you'll get it for $285, and that'll lock in your price for a lifetime. So hopefully for all of you that have followed me over the past, if you're interested, that's the differentiator between what I'm going to be doing now on my own website, is trying to offer you some more specific advice, whereas at StockCharts, we weren't trying to do that. We were trying to give you general ideas and not so much committing to a direction of the market. I'm more with my newsletter, I'll be able to be a little more bold on that. Okay, thank you for taking the time to join me on Market Buzz. Market Buzz airs live on Wednesdays and Fridays at 10:30 a.m. Eastern, 7:30 a.m. Pacific time on StockCharts TV. You can also catch replays on the StockCharts YouTube channel or on StockCharts TV, which has a running list of technical charting informational shows. Thanks again for joining me. Have a great week.